assessment and audit. In this segment, in this chapter or in this concept, first I am discussing various interest provisions under GST. So this you would have come across in different places, but I am just giving you a overall view about it. First we have section 50 subsection 1, which deals with interest for delay in payment of GST, and the rate of interest is 18% per annum. From when it should be calculated? From the first date after due date till the date of payment we should calculate interest. And this interest, we have some 24% per annum interest, but the 24% per annum interest is not applicable at present. So at present we have only 18% per annum interest. Then under section 60 we have one interest. What is that? Whenever there is a provisional assessment, so whenever a registered person cannot ascertain his GST liability, he can make an application for provisional assessment, that is determination of tax on a provisional basis, that is known as provisional assessment. In that provisional assessment, so whatever is the amount that provisionally assessed, the tax will be paid, and a final assessment will happen. Thereafter we need to pay the differential tax. But this differential tax is payable along with interest at the rate of 18% per annum from the first date after due date for the month for which we went for provisional assessment till the date of making payment. For example, July month we went for provisional assessment. July month due date is what? Say 20th August. From 21st August till the date we pay the differential amount, we need to pay interest under provisional assessment. Is it clear? So from the first day after due date of the month for which tax is provisionally assessed till the date of payment, 18% only. Then next we have something called as non-payment of consideration to the supplier within 180 days. Input tax credit, there we discussed. So every recipient should make payment to the supplier within 180 days from the date of invoice. If the recipient is not making payment to the supplier within 180 days from the date of invoice, so much of the credit availed needs to be reversed along with interest at the rate of 18% per annum from the date of availment till the date of reversal of ITC. Okay. Then section 17 is inputs and input services. Inputs and input services, we need to calculate the D1 and D2 on a provisional basis. Again we need to compute it at the end of the year. Suppose if the provisional basis whatever we have reversed is less than what we need to reverse on actual basis, then the differential ITC we need to reverse along with interest. From 1st April, I told you interest will be calculated from 1st April of the succeeding financial year till the date you reverse the differential ITC. In case of capital goods also interest is there. So interest on common capital goods we can avail the ITC and we need to reverse on a monthly basis proportionate to E by F along with interest at the rate of 18% per annum from the date of availment till the date of reversal. Okay, so that is this. But this 17 interest on account of capital goods is not given in study material. So usually, so this will not be asked in exam. Okay, so not in syllabus. Don't worry about questions based on this. Then section 56 refund interest is there. So interest, in case of interest, so first we need to make application for refund and within 60 days they should grant the refund. If they are not granting refund within 60 days, from 61st day onwards they need to give us interest at the rate of 6% per annum. If it is on account of appeals, like if the refund is on account of appellate authority sanctioning the refund, in that case the interest will be 9% per annum. So 6% per annum normal, but when appellate authority passes an order for refund, then in that case it will be 9% per annum. Same time, 61st day from the date of application till the date of refund. Okay, so this is about various interest provisions, and for delay in filing GSTR 3B, interest is computed on net liability. Already we discussed this. Okay, so then the next area is assessment under GST. So what we have seen so far is various interest provisions under GST. Say this, assessment under GST, there are in total 5 assessments under GST. self-assessment, provisional assessment and scrutiny assessment. Self-assessment is under section 59, provisional assessment section 60 and scrutiny assessment section 61. Whereas best judgment assessment, we have two best judgment assessment. Two cases best judgment assessment is possible. One is on account of non-filing of returns. So people who are non-filers of returns, so for them best judgment assessment is done under section 62. And unregistered person who is liable to pay GST, so their assessment, those unregistered persons who are required to pay tax but they are unregistered, that best judgment assessment is under section 63. Whereas 64 is summary assessment. Summary assessment means what will happen in summary assessment? Whenever a person tries to evade payment of GST, that is try to escape from payment of GST, and the department comes to know that information, without giving any notice they will be passing an assessment order, that is known as summary assessment. Okay, so see this: self-assessment, provisional assessment and scrutiny assessment 59, 60 and 61. Thereafter you can see best judgment assessment 62, 63 and summary assessment section 64. Now first self-assessment section 59, what is the status of the person? The person should be a registered person and notice is not applicable. Why? For self-assessment notice is required, not required. And situation normal, whenever a person, every registered person has to assess the tax payable and furnish the return. So that is this situation. Okay, and what is the time limit? Whatever is the due date of return. Now look into provisional assessment. Status of the person is a taxable person, and who will be doing this assessment? Assessment will not be done by that person. Assessment will be done by the proper officer. And notice, there is no notice and all. So we will only make a request for provisional assessment. So there is no notice in this case. Where the taxable person is unable to determine the value of goods or service or both, or unable to determine the rate of tax. When a taxable person is unable to determine the value of goods or service or both, or is unable to determine the rate of tax, then they will make an application for provisional assessment. Next, scrutiny assessment, I told you already, proper officer will do this. And will there be any notice in case of scrutiny assessment? Yes. Scrutiny is not summary. Scrutiny assessment is not summary assessment. Scrutiny assessment is, first you will file a self-assessed return. That self-assessed return will be taken for scrutiny and they will check regarding the correctness of the return filed. If everything is proper, then they will be, passing a scrutiny assessment order. So this scrutiny assessment is to check the correctness of the return. This scrutiny assessment is to check the correctness of the return, and if there is any discrepancy, then they will pass a scrutiny assessment order. If everything is correct, then they will not pass a scrutiny assessment order. But before that, if there is any discrepancy, first they will give a notice and seek a reply from us, and then only they will be passing the scrutiny assessment. Okay, so that is this. In order to verify the correctness of the return, the proper officer may examine the return and seek explanations. So notice is there. Then time limit. What is the time limit for passing the provisional assessment order? Within 90 days from the date of receipt of request, they need to pass the provisional assessment order. But scrutiny assessment, no time limit. Officer to take any permission, no. Withdrawal of order, no. Consequences. So what will happen in case of provisional assessment? After provisional assessment order, they will pass a final assessment order and recover any differential tax, or if any excess amount is paid, that will be refunded along with interest. And whereas in case of scrutiny assessment, we have to furnish the reply. Whenever there is a discrepancy, they will give us a notice and we need to furnish the reply. If the reply is not given within 30 days, or if the reply is not proper, in that case, they will proceed to conduct audit, investigation, etc. That is this. Then best judgment assessment 62 and 63, summary assessment is 64, and status of the person. So I told you 64 is unregistered person, whereas 62 registered person not filing the returns, whereas summary assessment is they will be Summary assessment also known as income escaping assessment. Okay. So these are the various assessments here. And audit, there are three types of audits: statutory audit, departmental audit and special audit. And this statutory audit is whenever the aggregate turnover exceeds 2 crores. Sir, but 5 crores is the limit now, sir. That 5 crores is generally now at present, but for exam purpose you remember it as 2 crores. Departmental audit section 65. So audit will be conducted by the department, whereas special audit is in case of ITC or irregular availment of ITC, irregular utilization of ITC or valuation. These two areas only will be verified in special audit. Okay. So who will be conducting statutory audit? Chartered accountant or a cost accountant. Special audit also conducted by chartered accountant or a cost accountant. But statutory audit, the chartered accountant or cost accountant is selected by the registered person. Whereas special audit, the chartered accountant and cost accountant is selected by the commissioner. Whereas departmental audit is audit team of the department, GST department. Then, so when audit is conducted, we discussed what is the time period of audit. Statutory audit depends upon the engagement. Then we have something called as departmental audit that should be completed within 3 months and it can be extended for a further period of 6 months. Whereas special audit should be completed within 90 days and it can be extended for a further period of 90 days. Then audit report, statutory audit report will be given to the registered person and registered person will be filing it with the department. Whereas departmental audit report submitted to both department as well as through the registered person. But remember, special audit report will not be given to the registered person, that will be submitted to the department only. And expense of audit, who will bear the expense of audit? Statutory audit, registered person, and departmental audit and special audit expenses will be borne by the department. Okay, so scope will differ in case of special audit because it is limited. Notice for audit, for departmental audit, at least a 15 working days prior notice to be given for departmental audit. And if the audit is already completed under any other law, audit needs to be done under this act. Even if audit is completed under one section of this act, the audit should be completed under other section if applicable. Then, can departmental audit be conducted for part of a year also? Yes. Even for part of a financial year also, departmental audit can be conducted. Okay, that is this. So with this, we completed assessment, audit and other aspects.